A mistaken upload by BlockFi now reveals the crypto lender had over $1.2 billion in assets tied up between Sam Bankman-Fried's FTX and Alameda Research. Well, for more on the implications for the crypto space and BlockFi creditors, let's get to Yahoo Finance's David Hollerith. David, what an unfortunate update.
Yeah, so last night, M3 Partners, an advisor for BlockFi's Unsecured Creditors Committee, mistakenly made this upload. And the mistake is that a lot of the information was unredacted in a presentation. And the presentation showed that the crypto lending platform had about $1.2 billion tied up with FTX and its related trading firm Alameda Research. And as we know, FTX bailed out BlockFi over the summer, then swiftly sent it into bankruptcy in November after FTX collapsed. And that $1.2 billion included $415 million in assets held with FTX, in addition to about $830 million in loans to Alameda. Now, the number was reported at BlockFi's first bankruptcy hearing as being $1 billion. And obviously it has since risen. The presentation, which has been removed as of now, and we'll see if that stands to be the case, given that it's already been revealed to the public, also showed that after adjustments, BlockFi has about $1.3 billion in assets, which is a little less than half of which is liquid, meaning it's easily sellable. The document also showed that between the period of May 2022 and up to its bankruptcy filing, approximately 73% of its 662,000 customers were retail investors with $1,000 or less in their accounts. Now, this is all to say bankruptcy claims for BlockFi at this point in time are selling at about 23 cents on the dollar.
So then as people wonder what this means for some of these crypto companies, are there any implications here for Coinbase's quarterly results? How bad could the damage be?
Yeah, Coinbase got ahead of some of the news or some of its Q4 earnings earlier in January by releasing preliminary statements on it. And we already have a lot of data outside of that based on its crypto trading volume, which is publicly available. But to put it into perspective, crypto exchanges have been grappling with what can be described as a huge loss of customer confidence since FTX. And Coinbase is a standout exchange, being that it's one of the only publicly listed cryptocurrency. It's the only publicly listed cryptocurrency exchange. And broadly speaking, during the entire year of 2022, cryptocurrency prices declined on average by about 64%. And Coinbase's revenue is heavily tied to trading volume. And Coinbase's CEO has also pointed out that they expect revenue to decline by half or more for the whole 2022 year. Now, in terms of what we can expect for Q4, the company's trading volume declined by about 9% compared to its third quarter. So we should expect things to be worse. Analysts are anticipating an earnings per share loss of between $2.39 and $2.49. And those are estimates, obviously, at this point in time. We have about 3 weeks until Coinbase does report Q4 earnings. And of course, the company has also announced a plans to lay off 20% of its staff earlier this month. And that will be between Q4 and Q1 of 2023 with the aim to cut operating expenses by about 25%. So over 2022, Coinbase cut about, or I guess we could say since cryptocurrency prices plunged, Coinbase has cut about 2,000 workers. So the big question here is whether or not these cuts are going to impact its development of becoming sort of what it's been hoping to do is more than just a crypto trading venue. But that being said, for the quarter, I think that we're going to see them focusing heavily on crypto trading volumes. And we'll want to see if FTX at all the collapse of it impacted their exchange or customer levels on the positive side.
We'll certainly be keeping an eye on that. We're seeing a lot more retail investors now relying on hard wallets and trying to come off some of these exchanges in light of what happened with FTX. Great update there. Dave Hollerith there. Thank you so much.